Thursday, October 28th, 2021, Monaco 64, home of alternative economics and contrarian views. Today, unfortunately, we're going to look at why the Keynesian fallacy is still alive and well and kicking, for that matter. We're going to look at briefly at the UK budget. I'm not the kind of individual who looks at all the details. Well, I used to sometimes, many years ago, because I thought it made a difference. We're going to look at the bigger picture, what it really means to you and I in the long term. But before we look into that, a little bit of fun, which we need more than ever these days. Billy and I started a campaign in the Teespring store. I think many of you will love the message and the way the products look. It's Let's Go Brandon. It's a way of expressing the way you feel right now. And it will also maybe help you with your Christmas shopping. Who knows? But we've designed, Billy and I, a lot of products. We've got phone cases. We've got water bottles, we got backpacks, we've got leggings, we got t-shirts, mugs, all with a great photo of Billy and the slogan, Let's Go Brandon. If you're interested, it helps the channel a little bit. I make a small profit from selling these. The link is below in the description, and I think YouTube puts below the video as well, it puts some places where you can click onto the Teespring store. So yes, this was the time of the year, of course, where the Chancellor of the Exchequer, who's the equivalent of Janet Yellen in the US, the Secretary of the Treasury, presents the budget for the next fiscal year starting April next year. And there's always a lot of attention on this budget speech. It usually lasts an hour. I remember when I came to live in the UK in the early 90s. Yes, I thought it was great tradition. The Chancellor usually had a glass of whiskey that he drank while he gave his budget speech. Usually there was even some betting going on onto how long the speech was going to last. You could go to the bookies and bet on it. But the more I learned about what makes an economy healthy and prosperous and free, the less I respected these speeches, the more I wanted these speeches, the budget speech by the Chancellor, to be very short instead of almost an hour. I wanted the Chancellor to get up, and I still do, with a little note card and just announce it in a few minutes, the budget. And you might think, well, what are you talking about? The government is supposed to do all these things. Well, that's the whole point of me talking about this. Our budget, and not just here, but you can see in the US, they want to bring in $3.5 trillion plus this and this, you know, trillions of government spending and interference. Oops, Billy just jumped off. He's not seeing very well, poor guy. You all right, Billy? Yeah, he's fine. He wants to lie down, I think. But anyway, back to the budget. So why only a 2 or 3 minute budget? Well, that would mean that the government would not be involved in taxing us, regulating us as much. If we just have a short budget, it would mean that the government would be doing the bare minimum to maintain the rule of law. That's what it's supposed to be. It's not supposed to interfere and kickstart the economy as the Keynesians like to emphasize. Basically, what this says is that governments, especially nowadays, they don't trust the markets. They don't trust individuals, small businesses to do the right thing. They want to like rule everything. They want to take your capital, your money, and put it in projects that they think are the best for the economy. And here we are, 70 years of Keynesian policies, and what have we got to show for it? Well, we've got a West that's been hollowed out, its industry. We've got the most debt we've ever had. We've got a financial system that runs everything. That's a huge casino. So unfortunately, it's not going to get better. Here's some articles about this. So this article says the budget has marked a philosophical shift in conservatism, the chief secretary to the Treasury has said, after Rishi Sunak opened the doors to taxes and spending, rising the highest level since the 1950s. Well, I can tell you the 1950s, 60s, and 70s weren't particularly the greatest period for the UK economy. The UK economy was in decline after World War I and II, for that matter. By 1976, the UK had to ask the IMF to bail the UK out. Yesterday, the Chancellor told MPs that there should be limits to the government. Well, there's the forked tongue. He's taxing and spending the most since the 50s, and he's saying there should be limits to government. But went on to confirm real terms rise in spending for every government department worth 150 billion over 3 years. I tweeted out this here yesterday, and I said speaking with a forked tongue. And I had these headlines from yesterday. It says, the Telegraph says Rishi Sunak's big spending budget means highest tax burden in 70 years. And then in the FT it says, Sunak sets out moral mission to limit state and cut taxes. And this is what it's on the back of. It's all out of thin air. It's all based on wishful thinking. And why do I say that? Well, because it says here in the FT headline, Chancellor reduces business rates and scales back universal credit cut as improved forecasts allow spending boost. So it's like you and I saying, well, I think my videos, I'm going to have 1 million subscribers by next year. So I'm going to start spending a lot more. I'm going to buy myself a new watch. I'm going to buy Billy a contract on Comex to take delivery of 5,000 ounces of silver, because I forecast that I'm going to do really well on YouTube. I'm going to get a lot more viewers than I have. The trend is going to jump up, right? That's what he's doing. But he's doing this with our money, with our economy, so to speak. Am I against the scaling back or cutting business rates? No. But if you're going to cut the size of government, you have to cut the size of government. You can't increase spending to the highest level in 70 years. And yeah, you won't be able to cut taxes. You can only cut taxes if you shrink the size of government, but he's not going to do that. So yes, it's insanity, right? Because the Keynesian philosophy is really dead, I would say, but they keep trying again and again. That's what Einstein said was the definition of insanity. So let's quickly finish this article here from the Telegraph. It says Sunak later told the meeting of backbench conservative MPs that in the future, every marginal pound should be put in to lowering taxes. And this morning told Sky News, and I quote, "My ambition is to lower taxes. That is what I would like to do as Chancellor, and I was delighted to start that yesterday." I mean, that's a complete deception, I would say. He's got the highest tax increases and government spending in 70 years, and he's saying he actually started cutting taxes, or he's on the road to cutting taxes. And why does he think he can do that? Well, because he's got this Keynesian mentality that thinks the government knows best and that it will kickstart. I hate that term when they say kickstart the economy. It says, however, Simon Clarke, his junior minister, told BBC Newsnight, I guess that was last night, the Chancellor was very open about the fact that this is something of a philosophical shift. What we want to see is to get the economy turbocharged. Well, they've gone from kickstart to turbocharged now. Unlock productivity and to deliver growth more evenly across the UK. That does require some upfront spending. So how can you unlock productivity when you're lumbering the private sector even more with taxation, with government spending? People forget that governments only spend and governments do not create wealth. So how can you unlock productivity when you've opened doors to taxes and spending rising at the highest level since the 1950s, as this article said? So what does this mean to us here in the UK? And I would say this is also what's happening in the US, even to a bigger extent. It's even more amazing, the kind of numbers we're talking in the US. Well, it means years of stagnation, years of big government, years of high taxes, low growth, inflation. Unfortunately, it's all going to continue. Just to show you how this forecasting that he's done, that he's based all this largesse on the back of, is very dangerous because, for example, Zero Hedge is reporting this morning that Germany cuts 2021 GDP forecast by 25% due to soaring energy costs. So here's Germany forecasting GDP shrinkage, the biggest economy in Europe. And then we have Rishi Sunak forecasting great growth here in the UK. And yeah, so with that, let's quickly look at where the markets are this morning. You might be hearing something in the background. Well, that's Billy playing around with his blanket. He is awake, and I'm sorry for the noise. So I'm a little later this morning. It's 10 to 9 a.m. We've got spot gold at 1802.80. That's up just under $7. Range has been 1804 to 1794. Silver is up 7 cents at 24.12. Range has been 24.17 to 23.96. So yeah, precious metals still trying to break out. Very close to it. I had a look at the weekly chart yesterday of gold, and it still looks pretty good despite all the shenanigans we've seen recently by the bullion banks. If you look at this chart, it looks like the trend is still up and we're still going higher. So what about the stock market? The Dow futures, it's up 62. The NASDAQ is up 46. S&P up 8. The FTSE is down 15. So much for the budget. Sterling is rebounded a little bit. It did drop yesterday a bit during this budget presentation. And I noticed that UK gilt yields dropped massively yesterday. And you think, how can that be? Well, I think it's a little bit of manipulation by the Bank of England. They have an exchange equalization account that they call. That was created before the exchange stabilization fund of the US Treasury a year or two before. And the reason they gave for gilt yields dropping so sharply, despite the fact that we're seeing the government come out with more and more spending and taxation is that they forecasted that they're not going to have to issue as many long-term gilts. I don't know, about 10, 12 billion. They cut the forecast. So again, all based on forecast, and the markets reacted to that as if you need to have UK government bonds. I think it's a big mistake. Why would you want to hold something that yields less than 1% or even close to zero when inflation is running like at 5 or 6 and it's not going to stop? But anyway, that's how markets are sometimes in the short term, and that's what happens when the government and the Bank of England are in bed together, because the Bank of England, that's what they've been doing. They've been buying government debt indirectly. They've been monetizing the debt, and that's not going to stop. So anyway, what about the euro? The euro is unchanged, 116.11. The dollar is down about 0.2 versus the yen, 113.61. Yeah, the dollar has crept up a little bit against the yuan. We're at 639.24. It's unchanged overnight, but it's a little higher than yesterday when we last looked at it. Aussie dollar is at 75.21. That's unchanged. The Canadian dollar is unchanged as well, 123.70. That's where the dollar is versus the Canadian dollar. I saw that the Bank of Canada stopped QE. They announced yesterday. That was a surprise. And they said they're going to start raising rates next June. Again, just talking about it, right? So I think the Canadian dollar might have ticked up a little bit yesterday. But as I said, these are all fiat currencies. So basically going to zero over time. The Kiwi dollar is up 0.2% at 71.80. Now to the commodities. Yeah, oil has come back. It looks like it's correcting here still. It's down 1% at 81.50. That's WTI. Natural gas, yes, spiked yesterday. I think we went up to almost 6.30. So this morning we're down 0.5%, but at 6.18. And what about the Treasury market? The 10-year yield is up 2 basis points at 155. And I've noticed recently that there's talk about how the US yield curve is flattening. So what that means is that the shorter term rates, like from about a year to 5 years, they're going up faster than the longer term rates, like from 10 to 30, and the longer term rates are even drifting lower a little bit. So we're seeing the short end, which is here. Usually a curve is like this. The short term rates are lower and the long term rates are longer because of time risk. But now it's kind of shifting like that, which means that the market thinks that the Fed will have to raise rates quicker. And that's what the market is forecasting. And eventually, if you get like a inverted yield curve, it points to a recession. Yeah, so we might need to keep an eye on that, on a flattening yield curve. Some people think it's not a good sign and that the Federal Reserve has made a mistake, that they're behind the curve, that they need to raise rates, but they're not doing it, and that the market, the short end, is telling us that. So if you enjoyed this video, make sure you hit the like button. Please share it far and wide. Think about subscribing to this channel if you haven't yet. And you can also follow us on Rumble, Twitter, Facebook, and all these other platforms below here. I wish you all a great day. Take care. Bye.